Welcome to Crypto College. Today we will get into the details of time frames. Beginners usually make a mistake with time frames because they do not understand the concept of time frames. So I'm going to go in detail and explain which time frames you should use depending on how much experience you have in trading. Okay, so let's start. So as you can see on the screen right now, I'm sitting on a 4-hour time frame. The coin is called Rune, R-U-N-E, USDT. I'm on a 4-hour time frame. So you have to keep in mind, all the time frames that we're talking about is in the past. Nothing's in the future. No one knows. We don't know. I don't know how the coin is going to react. Is it going to go long? Is it going to go short? No one really knows for certain. But we come to a conclusion by using technicals and data. That is all what trading is all about. It's not guessing, it's not gambling, it's using technicals, it's using data. That's where time frames, come to help us out on assessing what's going on, what will happen in the future. Okay? So we start off with, when I start off my trade, the first thing I look at is, what was the day like? What was the daily? So as you can see, the daily on my X trend shows it's been negative, right? It's you can go on December 26th, December 27th, December 29th, 30th, 31st, and today is the 1st of Jan. By the way, Happy New Year, and I hope this year brings a lot of joy and a lot of prosperity to you and your families. Okay, so as you can see, it has been negative. So what does that tell me? That tells me that trend has been negative, meaning people have been pulling money out of Rune. Okay, that's what I get from looking at daily. Let me look at weekly. What's been going on? Oh, same thing. Starting, I think, was it Monday, the 11th of December? It's been negative. Every week it's been negative. So it tells me that, it reached a certain point. As you can see here, the price point was, it reached a certain point, and this is when, retail investors or institutional investors, we call them aggressive investors, realize that the price is too high and they're not willing to pay any higher for this coin. So what happens then? It starts going down. And it has been going down since then. So if I was just, holding on to Rune, if I was not doing a futures trade, I would not get into this because I would be negative. If I bought Rune on 11th of December 2023, I would be right now in negative, right? So that's not the coin that I want to hold for now. Of course, that can change any minute. Anytime customers realize that the price is too low, and they will start buying it. But at this moment, for the past, I would say 1, 2, 3, 4 weeks, it's been going down. That's my weekly. That's as far as I go usually when I start trading. I look at the weekly, I look at the daily, what's going on, and then I'll jump to 4 hours, right? Now the 4 hours shows recovery. You see the green? Let me do this a little bit bigger so you can see that. So you see now 4 hours showing a green, right? The candle is green. So it is going up. Okay? That's a sign past two. See, you see two candles of 4 hours. Each candle is, when you go to time frame and you select a time frame, that's what the candle represents. So it's showing you two 4-hour candles, right? For the past 8 hours, it has been on a recovery. You can say on a price recovery, it's been going up. Okay. Now let me go to my 2 hours. Yep, Yeah, it's recovering. You can see 1, 2, 3, 4, 5, right? It's been recovering. These candles are all 2-hour candles. It's recovering. Let's look at my 1 hour. It is going up. The prices are going up. So if I am to take a long position, it would probably, if it's a shorter position where I'm scalping, I would probably make gains by taking a long, not short, because the trend for the 4 hours, 2 hours, 1 hour, that's been going up. And this is the reason we follow technicals and read data, is because if it's going up in the past 4 hours, we on the calculation of technicals, we come to a conclusion that for the next 30 minutes or 1 hour, it'll still be going up, or 2 hours still be going up, right? And we take a trade based on that. That's what scalpers do. So I look at my 1 hour. I'm going to go and look at my 30 minutes. It is going up, right? I'm going to go look at my 15 minutes. That shows also it's going up, right? And then I go into the smaller time frames, my 5 minute, which shows it went up. These are slight pullbacks, and then it's going up, right? And then I'll go into my 3 minute to see what's going on. You can see that since 10 a.m. this morning, New York time, it's been going up. There's a slight pullback, and then it's on its track to go up again. Okay, so that's what time frames are called, right? That's what the purpose is, to read the technicals to see where is a coin headed. Is it headed short? Is it headed long? Now, in combination, as you've understood by now, that we use 3 indicators. Those are confirmations. We don't rely on just one indicator, just the X trend. No, I rely on the volume. I rely on the RSI as well. Now let's come back to these 3. The volume looks awfully a lot of volume here. See, we're above, look at this, above 0. The volume is all the way up to 33. So it's building up. As you can see here again, it is building up. It is heading back. It's going back to the price that it was, right? For the past 3-4 weeks, it's been dropping. And now perhaps it's recovering. We don't know if it's recovering a lot or little. We don't know that. No one really knows that. I keep saying that. No one knows the future when it comes to trading. Otherwise, all these people would be billionaires. They aren't. It doesn't matter what they show you on social media. That's why I keep saying, stay away from these guys to show you sitting on a private jet or rented Lamborghinis or rented house and stuff. That's all BS. That's not real. Real guys will not show you all that. If anything, they'll hide that from everyone. But anyway, back to the topic at hand, time frames. So we look at this, we look at the 3 minutes. So remember, entries are always 3 minutes for us. Doesn't matter, what other time frames tell us. So this is how we use time frame in our benefit, right? We look at the time frames and then we move forward. Now, there are people, like sometimes I scalp on 1 minute. But again, if you're new in this trading, you just started trading, you haven't traded for at least 3 months, you do not trade on 1 minute, 3 minute, 5 minute. You do not trade on those time frames. Those are very risky time frames. Anything could happen. I could get into a trade in 1 minute. It would be heading, it'd be a long, and quickly it would turn into a short. As you can see right here. See, there was a green moon, positive volume. Let's say I took this trade, and you see what's going on here? Red candles. Look at this, red moon. So you would panic if you're a newbie, if you're someone new to this game. With me, it's not an issue. I know how to get out. I can look at the recovery. I could probably estimate that this 1 minute is going to go down here. It's going to bounce. And hopefully will come back up. So I might not even exit from the trade, right? I might have my stop loss or change my stop loss so I will not exit from the trade. But those things will come to you from experience. That's why we don't want you to get into 1, 3, 5. The minimum I ever recommend is an hour. Even if you're going to do a 15-minute trade, you're going to go by hour and 30 minutes, right? That's all we look at. We have to look at an hour and 30 minutes. You don't just jump on 15 minutes what it's doing. You need to see what the force is behind. So let me explain this to you. The 4-hour, 2-hour, 1 hour basically tells you that's the force behind it. So it might be doing something immediate in its own circle, like 1 minute, in its own authority, might be doing something like going down, but eventually the force behind it is for long. So it's going to change its direction, right? That's what we hope for. That's what we learn from the technicals. Now, a lot of times, what could happen is, yes, it follows that, but let's say the market went into a panic. Let's say a lot of people sold. So all that theory is down the drain. It's going to keep going down. It doesn't matter what technicals you use. It doesn't matter what data you use. If market is dumping, if aggressive investors, institutional investors are selling, the charts will adapt to that. That's basically what it is. We're reading the charts. The charts will change. That's why you'll see sometimes you're in a long, everything is perfect. All the technical and data support your long, and all of a sudden, it just spikes down. It drops down and blows through your stop loss. If you have a stop loss, it blows through it. If not, liquidates your account. And you're wondering what happened. I was reading all the data and charts. Well, this is what happened. The market makers, you're going to hear this a lot, the market makers. You and I are not the market makers. We're called the retail investors, right? We trade with 50, 100, 20,000, 5,000, 10,000. We're not the aggressive investors. They're coming in, institutional investors coming in with millions and millions and billions of dollars, right? They're the one that determine the market. So in other videos, I'm going to cover the coins you should trade to avoid this. You should look at market cap. You should be able to see if a coin is $1 billion, a whale with 10 million is not going to make an impact. It's not going to change the direction of the price, right? But if a coin is only $1 million, someone comes in with $250,000, $500,000, it's definitely going to change the price. And you'll be forced out of your positions. So we're going to cover that in another video. That's a topic by itself. I'm trying to keep this video short, but precise to the point. So time frames, this is what we follow. We go on to the 4-hour. First thing before we take a trade, we look at daily. You don't really have to go into the weekly because you're doing scalping. You're doing 30 minutes, 50 minutes, an hour at the most, 2 hours at the most. For position trades, it's something different. We will cover another video for position trading. Right now I'm talking about day trading. I'm talking about scalping, right? So we go on the daily. We see where the trend direction is. We go on 4-hour. We see that it's changing. It's trying to fight that. It is going up. You see, before it was all negative, all red. Now it's going up, right? So there might be a trend change. Buyers might be coming in. It's a new year. You know, a lot of money's coming in. Holidays, usually the money's pulled out. Crypto's like that, depending on the market. The U.S. market is the biggest market. Then comes the European and Asian market. But you see with most of them, money comes in and then pulls out by the evening, by the closing time. In the US market, there are a lot of position holders. You look at Bitcoin, it's at 900, roughly about 900 billion, right? Most of the guys in there are holding it. They don't just take out every day. They don't trade like I do. I go in, I take my profits, I scalp, and I get out. They don't. They stay in it, right? So it's a different market. That's why you see I use these sessions. I try to understand which market's open, which is closed, which opens. This really helps me with longs and short. In another video, I'm going to cover how you can make money just by following the market sessions. No one covers this. People don't realize this, that, you know, if you've been in trading long enough, you do 50, 60, 100 trades a day. Sometimes I've done over 110 trades in a day, scalping. And I realize certain times of day, like New York time, nighttime, it starts going into a long. That was when I was just started off trading. And then I realized it's because a different exchange opened up or a timing is different. Of course, crypto is 24/7, but institutional money comes in 9 to 5, depending on where you're located. Banks are closed on the weekends, right? So anyway, back to the time frame. So your goal is to look at 4, make sure it's the same direction. Look at 2, make sure it's the same direction. Look at the RSI down here. It's headed up. Okay. You see it's headed up, right? It's giving you a green moon. And we look at the 1 hour. It's not going down. It's at the point, but you still have a green moon. You still have the volume building up, right? So that is good. Now we look at 15 minutes. It's not going down yet, right? Still green moon, headed up. Now, 3 minutes, it's headed down. It's going to go down here at the bottom. It's going to bounce and then start going up, just like you see here. There's a little bit of pullback, starts going up. So I don't use 1 minute, but I'm just looking at it just to see sometimes what a 3 minute will do, but I don't use that in my trading. It is very, very hyper. And I don't want you to feel hyper. When you trade and you watch 1 minute, your heart's going to be pounding really hard. So, it's better not to. It doesn't really do much. It has a certain cycle, maybe 10%, maybe 5%, 8%, then it will come back to whatever the bigger time frames we're doing, right? It will go long again. So this is the theory about time frames. That's why you should use time frames in your favor, because we don't have yet, up until today, which is January 1st, 2024, we don't have anything that tells us with total conviction or determination that, yeah, the coin's going to go this way. We don't have such things, right? So we read technicals and data and we figure out and we take our position. So guys, again, I'm reiterating this. If you're a newbie, if you're new in trading, you haven't traded for 3 months, right? You do not trade on 1 minute. I don't care what you read, what someone told you, or what you watch on YouTube. You don't jump on 1 minute. You don't do 3 minutes. You don't do 5 minutes. You stay away from these 3 time frames. These are very small time frames. They're deadly. They can wipe you out in a blink of an eye, right? You stick with longer time frames, bigger time frames. 4 hour, 2 hour, 1 hour, 15 minutes. Of course, you enter on 3 minutes. That's always the rule. Anytime you enter a trade, you enter on 3 minutes. Now, the smart thing to do is, let's go on 3 minutes. If you're going to do a long, right, that's why you use these 3 indicators. The best time to enter would be when this 3 minute bounces off the bottom, because it's still going down. If you enter now, you will go into negative, and chances will be you might hit your stop loss. What's the point of doing that? So, and we don't know if this is going to keep dropping, right? So we wait. We wait for this to bounce. This RSI should bounce at the bottom, start going up, should cross my 20 line. See this 20 line on RSI? Should cross that and should be pointed up. And you see these 2 lines? We call the K line, the D line. You see these 2 lines? The red is on top right now. As you can see, that means it's headed down. It will bounce and it will cross. You have to wait for the cross. When cross happens, that means the green becomes on the top. See right here. Let's go back here. Look at this. It crossed over, right? And then green was on top and it started going up. And then you'll get a green moon and you'll start getting volumes here. So you have to wait for the 3 minute. You have to wait for it to bounce, go up, green on top. You have to wait for the moon. Do not be in a rush, guys. You're going to have thousands and thousands of these trades every day. Do not be in a rush. Look at my coins here. I have over 120 coins listed on my list. So it's not just one coin I'm worried about. There's over 120 coins. There's over 1,600 coins. So anyway, wait for the see. It's turning now. It will cross and it will go up. If it doesn't go up, that means there's a lot of selling in the market, so you shouldn't be taking a long anyway, right? So you're going to wait for it to cross and go up. You're going to wait for a crossover here with the price action will give you a green moon. You see, every time it crosses over, it gives you green or red, depending on the direction. You're going to wait for this to cross and give you green moon. Those are confirmations. Do not rush. Again, people that lose money is because they jump on too early. They rush. They feel they're missing out on profits. But it's not profit until you cash it, right? So you wait for this to turn into a green moon, and then you enter your trade. Look right here. RSI was headed up, right? And you see green moon and you see all these profits. So you're going to wait for that. You're going to wait for the 3 minute to turn and go in that direction. As you can see, the 1 minute hasn't bounced. That means there's selling going on. Look, when it goes like this and it just gets flat against the bottom or the top, that means there's a lot more selling going on. It cannot go lower than this, right? It just stays here. But it might keep going down. So not a good time to take a long position. You need to wait for the 3 minute to bounce. And then you're going to look at other time frames and see if they're all headed up. Okay? So in brief, time frames are very important to understand what has happened in the past and how much momentum can it carry in the future. Right? So if you look at the weekly, it shows you a little bit more. Look at the daily, it shows you a little bit more. You look at the 4 hours, that might change. We've seen 2 candles at that time, right? Going green. Now maybe after 4 hours you come back and you'll see a red candle. So it will go back and join the trend that has been carrying for the past 3 weeks. Right? So this is the reason we look at time frames and we try to understand what is the best strategy. So the best strategy is to check your 4 hours, check your daily, check your 4 hours, check your 2, check your 1 hour, look into 30, look into 15. And then once you've determined it's going to be long or short, wait for the 3 minutes. If you're going to do a short 3 minutes, if it's at the bottom already, probably not the best place to get in. Yes, it might keep going down, but we don't know that. That's a big might. It might bounce off here. So the best time to enter a trade when you're doing a short is wait for the RSI to be on the top here. Because then you've got all this here to take profits. Look, right here. When it was on top and it crossed. So the red one was on the top heading down. Look at the profits. Look right here. So please be patient and wait for the 3 minutes to be on the top. And then you can take that trade going down. If you're going to do a long, then you wait for this to bounce from here and go up. And I would wait till it crosses to 20 and then confirmations, which is the green moon and the trend. Always the trend. Like right now, it is a green trend. So if it continues, perfect. You open your position. All right, guys, that's it for the time frames. Hope you understood a little bit. We're going to do a lot more videos on time frames. And as always, safe trading.